I'm Ashton Addison from EventChain for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Julian Hosp, the CEO and co-founder of Cake DeFi. Julian, welcome to the show, and thanks for taking the time to be here today.
Looking forward.
Yeah, I would love for you to give a little background into Cake DeFi. I know you've been in the space for a while, and Cake DeFi is doing some really interesting projects in the decentralized finance space right now. So if you could just kick it off to start with just a high-level overview and the focus of some of the products you're delivering and the solutions you're providing with Cake DeFi, then we can dive into the details.
We started Cake DeFi 2 years ago, and with me, I mean myself and my co-founder Julian, who is more on the technical side. I take care more of the business side. And we realized this upcoming trend of DeFi, decentralized finance, back then, that's over 2 years ago. And so we wanted to have this one-stop platform that kind of pools all those services together. We started with staking, then we added lending. Now we're doing liquidity mining. And so one thing that we're really looking forward to is this entire tokenization of assets, but doing them synthetically and offering them to our customers in a very, very easy way. So that's always what's been our credo. Not losing the transparency that blockchain has, but increasing usability.
Definitely. And do you see anything wrong with chasing high yield DeFi, the strategies that are being done to chase these high yields right now? And are there any specific solutions that you're trying to provide for specific problems in DeFi?
I think it's a really good question. It depends where the yield is coming from. If the yield is coming from nefarious sources because it's more like a Ponzi scheme, then I think there's definitely something wrong with that. And Cake DeFi stays very far away from any possibilities that goes this route. And we have projects who come to us and say, why don't you list us? We provide 200% per year. And we're like, this is probably dodgy. Let's not add that. But if the yield is actually coming from the protocol itself, then what's going to happen over time are either two things. Either the protocol has to decrease the yield because otherwise you have too much inflation in the protocol, or option number two, and that happens actually most of the time, is that this information arbitrage that only a few people understand how this yield works, it's going to be more and more people, and thereby the yield is just going to go down. It's going to go to an equilibrium in comparison to many other yields. So what I just see at the moment is Cake is using arbitrage a lot, and over time, more and more people will use this. And I just want to quote the S1 here from Coinbase, who stated the business model that we have been doing over the last 5 years is probably not going to be the same business model we're going to be doing over the next 5 years. And for Cake DeFi, it's going to be very similar. I just think in 5 years, the yields that we have seen are not going to be there anymore.
Definitely well said. And yeah, there are some ridiculously high yields, and of course those are unsustainable. So to do it right from the beginning and to have the right products, I think is going to put you off on the right foot and build a strong foundation. And of course, in 5 years from now, the DeFi space is going to be drastically different, and you're going to have, probably a lot more advanced decentralized financial products as well. Can you just talk about when you started out, what are the main products and the most popular products on Cake DeFi?
Most of the people in decentralized finance, they want yield. So when we look back a bit over 2 years ago, the biggest driver for yield was staking. So you had mining, but there you had to invest in the hardware, and it was just a bit complicated. So staking was the biggest part. So you lock up your funds, you get a return from the protocol. From that, then I guess BlockFi in the US was one of the biggest drivers. They always call Cake DeFi the Asian BlockFi, which I guess also comes from because we also started with this lending. So you lend Bitcoin, you lend Ethereum, and you're getting a lot of cash flow from there. I guess what's really different here for us, we try to keep the same transparency that you would have if you would be lending directly on a blockchain. So for us, this has been always a big focus. The hottest topic right now is really liquidity mining. And it is because of the yield. Some of our products offer over 100% per year. Again, this is completely legit. It sounds insane, but it's completely legit. You just have to expect that over the next 1 year, the 100% yield is not going to stay. It's going to go down more and more and more the more people are actually using that service. So that's been a bit of the evolution of our product offering. And obviously, people love when there's higher yield. And so, liquidity mining is the hottest thing at the moment.
Yeah, well, that's why it's good to, if it is a it has a strong foundation, it's a legitimate project, and you're there first when there's not a lot of people that are providing liquidity, then obviously you're going to be earning the rewards more than once people and everyone's doing it and there's not a lot of extra value to add. So I could see why being over 100% is normal, and it is legit right now, and it is impressive, which is why people are starting to use Cake DeFi. And I was looking at some of the other products you have, and I saw that there was a freezer option. And I know that there's like locked staking and locked liquidity, but this freezer seemed like a unique twist on, freezing your assets. Can you talk about the freezer in Cake DeFi?
So we are completely transparent about how we make money, where the money is coming from. Actually, all our services and products can be used by our users themselves. So in theory, if they had the technical knowledge, the funding, they could do all this themselves. So we are just a technical play. We are also completely transparent for that, how much money we're making. And it's about 15% on the revenue that the customers are making. So if the customer were to do it himself, he would get 100%. With us, he or she gets 85%. Obviously, some customers say, hey, I really love you guys, but the 15%, is there something we can do about it? And so we say, you know what? If you become our loyal customer, so you commit to use us for longer, we're willing to cut down on that fee. And so we call this a freezer, where you can lock the service up to 10 years. So you commit up to 10 years. It goes in monthly stages, 1 month, 3 months, 6 months, a year. You commit to use our service for longer, we're going to reduce our fee. So you're going to see a higher return, but simply because we're taking a lower cut. And I mean, it's just like any service, I guess, out there. The best customers you have are the loyal customers. And so you try to give them extra benefits. And for us, there's nothing we can add on top because we are getting the money from the protocol itself. All we can do is cut down on our fee, understanding, hey, in return, we're going to have this customer for a committed period of time. And that's how the freezer works. Obviously, a pun with cake. So yeah, lot of it's very playful on our website. Yeah,
that's great, and that is great to be rewarding your loyal customers and long-term customers. And early on, do you see that as it's hard to provide these different incentives when you're really just getting the yields from the protocols? Do you see that as one of the incentives to drive early adoption, or are you also just seeing a lot of organic growth from early adopters on Cake?
I mean, both. On the one hand, we see massive organic growth simply because a lot of people just appreciate this one-stop platform with access to so many things. And then they say, you know what, I'm not going to use that service because that service I can use myself. But the other two services I use because Cake is just so easy. I don't have to worry about so many other things. So a lot of this comes organically and naturally, also because we follow that spirit of trust, but being able to verify. So that is kind of the credo here. Not just you have to trust us. So we're really transparent about that. And then on the other hand, we do have a very aggressive referral program, and that is. And that has been, I think, almost 60% of our users actually come in from referrals. And the reason for that is also because we incentivize the referee and the referral, both ends. And we incentivize them based on how much money they deposit with us, how long they keep that money with us, how many people refer. And so it's a very attractive referral program in the industry, and it has shown to really do well. And I think word of mouth is just very powerful, especially in the crypto space.
Definitely right now. And then I'm guessing that the majority of the DeFi products that you have right now are on the Ethereum ecosystem, because that's really where the bulk of DeFi is, but there are a lot of other ecosystems that are popping up. And as you said, 5 years from now, DeFi is going to be drastically different. I'm curious on your future plans, and is this something that you're looking towards as you expand Cake to potentially be moving into other decentralized finance ecosystems and tying into other blockchains?
We are completely blockchain agnostic. So for us, whatever works. One ecosystem we haven't integrated yet is the Binance Smart Chain ecosystem. It's one that we're starting to integrate right now. One exciting one, and that's also because a lot of the team are actually involved in there, is an entire project called DeFi Chain, which brings DeFi to Bitcoin. So that is one that we're really excited about. Obviously, the Ethereum ecosystem. But we also have some of the very old kind of staking coins, Dash, for example. Obviously, we have Bitcoin integrated, mostly for the lending side. We are blockchain agnostic. We go for what the customers want, what from a regulatory standpoint works well, what obviously generates yield for the customer, and these are the things that we're working on. And yeah, so far that has been, I think that's the good game plan. You try to stay agnostic and yeah, just kind of pick the best out of both sides.
Definitely, and I completely agree. And I was looking at some of the yields on Cake, and I saw that there's the DFI token, which is fairly high yield, and it looks like that's part of a native token for the platform. I was wondering if you could talk a little bit about the DFI token, the functionality throughout the platform, and does it create a sustainable ecosystem for all the participants of Cake DeFi?
The blockchain was started a year ago, and DeFi chain is exactly that, what I mentioned before. A couple of us are really deeply involved there, so obviously we're huge fans and huge drivers. And the idea behind it was to extend the functionality of Bitcoin, to bring DeFi functionalities to Bitcoin, especially the lending side, the tokenization side, more advanced smart contracts. It follows the same principles. It has a limited supply. It doesn't have a proof of work. It has a proof of stake. And so this is where these high yields are coming from, because the chain is only a year old. It's just like if you were mining Bitcoin at the very beginning, you would have received insane yields, just because there are not that many Bitcoins yet out there. There are not that many DFI yet out there. So the yields just look very, very high because inflation at the beginning is just very, very strong. And I'm a big believer in the project long term. I think it's going to be a very exciting toolkit, especially for the Bitcoin ecosystem. Obviously, most people on the platform right now are staking, because staking gives like 90%. It's absolutely crazy. Again, over the next 2, 3, 4 years, those returns will also go down. But it's just at the beginning. So yeah, a lot of people are using the liquidity mining tool there, supporting the DEX from Bitcoin into all the other coins. So that's where I stated once on Twitter that I don't understand anyone that doesn't invest in Bitcoin. And I don't understand any Bitcoiner that doesn't invest in DeFi chain, simply for that additional functionality. I stay by that statement.
Definitely. And yeah, it's going to be so important for Bitcoin to integrate that DeFi to catch up, because there's just so much functionality inside of the Ethereum ecosystem because of the decentralized finance capabilities. And these Bitcoin maximalists that aren't having any of it in terms of the DeFi stuff, I think that eventually they will definitely come too. Yeah.
Agree, 100%.
Yeah, and so you do have this partnership with DeFi Chain, which is great. And I was wondering if you could talk about any of the other partnerships that you're working with and have worked with Cake DeFi so far.
I mean, okay, so DeFi Chain is not really a partnership. It's just one of the chains we have integrated. Obviously, because a lot of us are contributing to the chain, obviously there's maybe a deeper connection. But in theory, we're really blockchain agnostic. I really want to highlight that. That's also why we're adding the Binance Smart Chain ecosystem, the Ethereum ecosystem. We're going to look into others as well, Polkadot and so on. From other partnerships, we need institutional partners, especially for the generating yield on Bitcoin and Ethereum side. We've worked here in Singapore. Both are regulated entities. We work with Sparrow Exchange. We work with Signum Capital. They are a humongous fund here. And the way we work there is different to how, for example, BlockFi generates their yield on Bitcoin. And that's why their yields have really been collapsing. They are really speculating on arbitrage opportunities, for example, the grayscale system. And for us, we always shied away from there a bit, because I had assumed that these yields are going to collapse, just like any arbitrage possibility is going to collapse at some point. And so for us, this is way more work together with large platforms where people short Bitcoin, where people have requirements to actually borrow Bitcoin. And so for that, we do need these large regulated partners, so that on the one hand, we actually have access to those opportunities, but then on the other side, to really protect our customers.
Definitely. And you need to have those big partnerships. I think is going to make a big difference when the platform gets into that widespread adoption and just like a lot more participants. And I'm curious if you, as you continue to grow in terms of the DeFi space, what do you see as one of the key factors to success for Cake DeFi becoming one of the leaders and one of the go-tos for people in DeFi?
I kind of scratched the surface at the very beginning, and it's, I think, a good point, a good time to close the loop there. I do see that the returns and the revenue, and I posted those numbers on Twitter. We have these transparency statements. We made 170 million in revenue in the first quarter of this year. We did about 15% or 10 to 15% of that in net profit. So we're talking about like $20 million in profit just in Q1. We are self-funded. My founder, my founding partner and myself, we own 50% of the company each. So our business is extremely profitable, extremely attractive. But, and this is the big but, it's the same like Coinbase stated. I don't think that over the next 5 years, we can do the same things that we have done, not for the past 5 years, because that's not when the company existed, but for the past 2 years. And so I think for us, a big thing is going to be to transition into less arbitrage businesses and way more true DeFi business. And to me, this entire true DeFi actually comes as soon as you approach the entire financial space. It is when synthetic stocks, decentralized stocks are actually coming to the platform. Not like what FTX or Binance is doing right now, where they're actually just tokenizing stocks. It's still a security. And that's why all these platforms get in trouble with the regulator. But so you want to do this from a regulatory standpoint, really, really solid. So you want to make this synthetically, decentrally. And you want to offer that. And then you want to offer this really strong interchangeable ecosystem. That's why we want to stay blockchain agnostic, where people have access to literally any financial asset. They can do anything from a one-stop platform without having to worry about what do I need to do? How do I need to sell this? How do I need to buy this? It should be algo supported, automated, and that is kind of, so right now people call us like the Asian BlockFi. I hope maybe in 5 years, they're going to call us, I don't know, the Asian Robinhood or the Asian Wealthfront, something along these lines. And that's kind of what's going to be a major factor in being successful over the long term.
Definitely, well said. And you mentioned a couple, integrations, things that you're planning on working on. I'm curious, what are the next steps for Cake DeFi, you're running right now? In terms of the next couple months, what are the main things you're looking to bring out for the public and for the participants of the platform?
I think the main thing there is really to kind of finish off these traditional DeFi products right now, to offer a couple more different freezers, to offer a couple more lending opportunities, to clean up the staking liquidity mining. So this entire chapter works really well. And then we're probably going to stop working on additional service when it comes to that and really start shifting over and saying, okay, we have added those three kind of streams. Let's go to the next one. And the next one is this concept of decentralized tokenization. Let's start adding stocks. Let's start adding commodities. Let's start adding precious metals. And let's start adding those so that by the end of this year, 2021, you actually already have access to pretty much all the asset classes. Because then in 2022, we can go ahead and we can start using algorithms beyond that, where you as an investor can just go and say, hey, I want to do low risk, low return. No, you know what? YOLO. I want to do high risk, high return. And the portfolio itself kind of adjusts to your preferences and what you want. And then when reasons kind of take over and less the emotions, generally speaking, your investment results should be doing really well. And so that's what I hope over the next 6 months, 1.5 years, that's kind of the roadmap ahead.
Great. And for people that are looking to get involved with Cake DeFi, get involved with the communities and start using the decentralized finance products, what's the best way for them to get started?
Go to cakedefi.com. So that's just like cake, like eating. It's a piece of cake. CakeDeFi, DEFI.com. Twitter, the same handle. And if people want to follow me on Twitter, my name is Julian Hosp on Twitter. I tweet a lot about Cake. Obviously, it's my company, my baby. So yeah, it's quite an exciting journey.
Awesome, Julian. I will leave all those links in the description box below for the viewers. Thank you so much for taking the time to come on to talk about Cake DeFi. All the best with the platform moving forward, and let's follow up in the near future.
Definitely. Appreciate it.